Before we jump into the video, let me just say that I'm not a financial advisor, and this video, including all the other videos on my channel, are not a financial advice or an investment advice. What I'm about to show you guys is only for educational purposes. Please do not take it as an indication for you to go ahead and invest your money in trading or online trading, whatever it is you trade, forex, crypto, whatever. Please make sure you do your own research and analysis before you take a trade or before you even think about investing your money in this field. What is going on, guys? Welcome back to another brand new YouTube video, my first official crypto analysis video ever. And this is actually something that I did when I was learning about crypto. I was doing analysis, I was doing back testing. That is when I did the prediction, this trade that you guys will see in front of me. Now, everything that I've done when I was analyzing this trade is basically what I used to do with forex. Everything is similar, nothing has changed. The way I do my analysis is still just like the way I used to do with forex. Okay, so back then when I was doing forex videos, I made a video about patterns that used to appear all the time, and the patterns I used to trade myself. And I made a video, if I remember correctly, I made a video on this pattern right here, this specific pattern, head and shoulders, which if you're a beginner or if you have spent some time with forex, I'm pretty sure you already know. This is a very powerful pattern that appears most of the time. And when I was backtesting crypto, I noticed that this pattern itself is the one that repeats over and over again. This is the one that I saw the most, head and shoulders, whether it be this one or the inverted one, the inverse head and shoulders. I've seen them over and over again. So even on the lower time frames, you can see these. But like I said, I used to analyze looking at this pattern or just support and resistance and what the retail was doing, what the institutions were doing. And just like that, I used to make my predictions, right? Just like the old times, 1 hour time frame. Actually, let me show you guys first the picture before all of this happened, and then we'll move forward from there. Okay, so as you guys can see, this is the picture right here. Actually, let me move it a little bit so you guys can see the comparison better. Okay, much better. Now, if you guys look over here, look at the picture itself. I took this screenshot on the 19th of December, which was 5 days ago, right? And I was looking at this picture, and I was actually looking at this pattern, sorry, not picture. And I saw that the market had started rallying from here, and then there was a resistance at this point where you guys see the blue line. I'll show you guys in a second. There was a rally, and then we had a little pullback, and then we had another rally, and then the market came straight back to that area where the pullback had happened. Now, when the market does this is usually the market coming back to the neckline. This is the neckline area. Okay, and this is usually where the market drops back if it is going to, in the future, indeed create a head and shoulders pattern. So that is exactly what happened. The market dropped down. It was a very sudden drop. You can call it a pullback, whatever. And then the market created this and then this. Now, also, you guys need to remember something. Whenever the market creates a head and shoulders pattern, it is always not going to be a picture perfect, one left hand shoulder, one right hand shoulder. It doesn't always work like that. Okay, the market will create multiple shoulders, maybe on one side, and on the other side it would just be one shoulder. The whole point is that you look at the pattern and you recognize it, and then you can make your predictions off of that. So once I saw this, now let me go back to the chart and I'll explain to you guys in a better way. Okay, so when I saw this, right, I saw the market creating this, and I was like, you know what, this actually does look like a head and shoulders. Now, one thing, guys, whenever something goes up like this, especially like this, in a rally, in a sudden way, there's a spike, or in the crypto world, as you like to call it, there's a pump in price like this. The market, whatever goes up has to come down. This is the most simple, basic thing that you can learn in forex, okay? Whatever goes up has to come down, no matter when, no matter how long it takes, it has to come back. So when I saw this rally, I was like, you know what? This is a very sudden rally. This is a very sudden move. The market has to correct itself. Correction is basically another word for market having to come down or making a small pullback to balance this, to fill this move out, and then it can do whatever it wants to do in the future. So whatever, number one, whatever goes up must come down. The second thing is looking at the price action. When I was looking at the price action, I could see that market was failing to create new highs over here. If you guys take a look over here, we have these two wicks that were not broken with this one. Maybe this one, it came very close. It came actually very, very close, almost the same. Okay, so this is 0.6072 and this is 0.6051. So it came very close, but you guys see that without creating a new high, higher high, the market came down and created a lower low. So this price action indicates to me that price or the market is not strong enough yet to continue higher. And this gives me more confidence that indeed the market will continue lower. Now, that is all that is sorted out. You have recognized the pattern, you know, looking at the price action that the market is going to continue lower. Now, how do you trade that? Where do you enter? Where do you exit? If you guys look at my previous entry, which let me show you, my entry was here. Now, this is not realistic, okay? This is just me indicating, me showing and predicting that the market is in fact going to continue lower. This is not how you trade head and shoulders, okay? This is the risky way because you do not know if the market is the market could reverse from here. This has happened to me a million times. The market creates head and shoulders, and then when it comes back to the neckline, it just reverses from here and continues higher. Okay, so this is just me predicting that the market is indeed about to continue lower. Now, how do you trade this? When the neckline is broken, this is the neckline basically. This area right here. Okay, or this zone. When the market came down with the red left shoulder, when it created the left shoulder, it went up and then it came down. Basically, the area where it meets the previous shoulder is basically the neckline region, okay? So when this neckline is broken and the market continues lower, this is where you should enter. This is a very safe way of, okay, so like I was saying, this is a very safe or the safest way of trading head and shoulders, right? Your stop loss could be right above this resistance, right? You could place it here, about 6.6% stop loss. And your reward would be right where the leg started or where the rally, the sudden move, the spike started. That's where your take profit could be. Now, this is the safest way to trade head and shoulders, right? And of course, just like forex, you could also trail this. You could trail this move. You could keep moving your stop loss below. I don't know if you could do that in crypto. Let me know in the comments if you could, because I'm only going to stick to spot trading. I actually took a trade a couple of days ago on Bitcoin, and I'm gonna be honest, I had no idea what I was doing. So I'm gonna keep trading. I'm gonna keep perfecting myself until I'm ready. I will not share with you guys how to trade crypto using spot trading. So if you could trail this, now this was a 1 to 2 risk to reward. Okay, you were risking about 7% to gain 15%. And if you were to trail this move, you guys can see that it actually went all the way down to 60%. And let me show you guys how you could have predicted this as well. Now we're looking at the daily time frame. Okay, let me delete everything. Okay, so on the daily time frame, you guys can see that where, like I said, where the rally starts, that is where the market has to come back to. With you guys can call it other names, but in my experience, where the rally starts, the last sell candle is where the market should come back to in a move to the upside. When the market moves up, there's a rally, there's a spike, there's a pump. The last sell candle before that move up is where the market has to come back to. So if you guys look on the daily time frame, where do you guys see that candle? The last time where the market sold before the rally to the upside, I see it right here. Let me zoom in and I'll show you guys better. So this was the last time, the last candle, last sell candle on the daily time frame. This one right here. This is where the market has to come back to. Okay, now if you guys look, the market never broke below this, never came down lower, never created lower lows. You guys can see after this move, basically after this move, it was just up. Market started creating higher highs. This is a higher high. Market started creating higher highs, and you guys can see that the market just took off from there. So this is a very good indication that the market is about to create a new high and a new higher low, and basically a new trend. This is a reversal, right? And you guys can see the market did come back to that area. Now, if you were, like I said, if you guys had predicted all of this, and you guys, let's say, entered on the retest over here, and you guys were aiming at this area with your stop loss just above these highs. Actually, 1 second, just above these highs. Okay, so if you guys were in fact trailing like this, which I used to do in forex, I used to trade like this, right? I would just go to the higher time frame and then look at the next liquidity pool, or basically where the next liquidity zone was. So you guys can see that also. If you guys were familiar with my institutional candles, you guys can see that before the market came down, it took these, or actually, sorry, went up. It took out all of these equal lows, relative equal lows, right? This liquidity basically doesn't have to be equal lows. It can be liquidity, any sort of liquidity. So you guys can see this was a support, right? The people were buying here. And then what happened? It dipped down, grabbed those lows, and then basically shot back up. I don't know if it's going to reverse from here or not, but I'm just saying how I predicted this move using just head and shoulders. These are extra confirmations that you can apply or look for. I mean, the more confidences, the more confirmations you have, the better your trade is going to be, or the higher chances you have of actually winning that trade. Now, I'm analyzing Bitcoin at the same way. I'm looking at Bitcoin the same way, but that's going to be for a separate video. I just want to show you guys how simple your analysis can be. Now, remember, looking at the other channels on YouTube about crypto, people talk about fundamentals, the news, the institutions, the big moves, and this and that. It doesn't really matter. I never look at fundamentals. I'm just showing you guys one trade, one simple analysis, how you can do this without knowing. Now, of course, there were other factors that played out behind this move. The SEC from the United States, they sued Ripple basically, and Ripple is the one who owns XRP and whatnot. And then that basically led to the downfall of the currency like this, right? But I never look at the fundamentals. That's what I'm trying to tell you guys. Even when I was trading forex, yes, there were big news and big events happening that were behind the move. Yes, but I am telling you guys that if you get into the fundamentals, you might get lost. You might lose hope. You might not know what to look for, and you will start focusing on the fundamentals too much. But if your analysis is correct and you are patient enough, just looking at one simple pattern, which is head and shoulders, right? And just being patient enough for the market to actually break that zone and retest it, you guys could have entered. It doesn't have to be looking at news and looking at events and waiting for big events to happen. No, just one simple analysis. Technical analysis is what I focus on mainly. And I will upload another video couple of days after this video showing what I am looking at Bitcoin, how I'm looking at Bitcoin, and what could possibly happen in the future. Now, remember, guys, trading is very risky. It can go either ways. The whole point is you taking probabilities, you analyzing the market, and then minimizing your your chances of losing and increasing your chances of winning. That is all there is to trading, whether it be forex, whether crypto, whatever. This is a whole game of probabilities. Now, you could either jump in blindly, or you could just do your analysis and then be patient enough for that analysis to be respected. And that's it. I hope you guys learned something new from this video. I'm going to be doing more. I'm going to be uploading more videos in the future about crypto, about what crypto is itself, the theory, and then I'll show you guys also the analysis that I do. So I'm going to be uploading both. As I'm learning, I'll keep sharing with you guys. Hopefully this is a great start to a new journey, and I'll see you guys in the next video. Peace.